Hi, it's Morty, speaking from my trading room in London, and I just want to talk about oil. Now, I have said in other broadcasts that being in Forex is by far the best financial instrument to be trading. When you can, especially as you consider that we have the mother of all stock market crashes around the corner, probably going to occur sometime between 2008 and 2012. I've spoken a bit about baby boomers. They're certainly going to be a factor in in causing a depression in stock prices, but we also need to consider other factors. And today I wanted to talk about oil. The Western capitalism is very dependent on energy, and we derive a lot of that energy from oil, and therefore the success or failure of Western business, to group it all together, is very sensitive to the price of oil. Now, I used to trade oil futures, and they used to be held in a very tight range by OPEC, and Brent crude was something like $25 a barrel. And now it's up to $75 a barrel, and all the indications are that it will go to $150 a barrel in the near future. This will have a dramatic effect on stock prices. This will make businesses' costs spiral and make it very difficult for them to make profits and therefore make returns to their investors. Now, we have had very high oil prices before, particularly in the 70s. But then there were political dynamics which controlled supply. The problems now are that there is plenty of supply, but it can't be got out to the customers quickly enough. And the main customers are in India and China. When you have a look at our oil consumption, the average Brit consumes about 10.5 barrels a year. The average American consumes 26 barrels a year. Now, if you compare that with China, where the average consumption per head is 1.5 barrels, and in India it's just under 1 barrel. Now, India and China already take a significant amount of the world's oil supplies, and yet their citizens are barely consuming any. And the reason why they consume so much is because there are so many of them. When the Chinese and the Indians wake up to the lifestyle oil can provide in terms of cars and air conditioning and electricity, they will simply suck up all the oil supply there is and reserves there are globally. Now, this may sound like a very incredible claim, but you have to realize that oil production in the world has already peaked. Where there are significant reserves, they're often in parts of the world that are very unstable. Where there are stable suppliers, such as Saudi Arabia, they've almost certainly overstated their oil reserves. So we are in big trouble over fossil fuels. In the US, the situation again long term looks dire. There isn't enough oil to supply the needs of Americans for the next decade after decade. Their refining capability is also a limiting factor. Now, the problem with rising oil prices is it spills over into other necessities for life, for example food and housing, and therefore we are looking at inflationary times ahead. All of this is very bad news for business, but it's very good news for foreign exchange traders, because they are not going to be hit by these inflationary changes as hard as traders who trade stocks. And also we have a proxy for oil prices, and that is the Canadian dollar. The Canadian dollar is going to be a very important currency pair to trade in the next few years. There are other elements that will contribute to the stock market crash. These include food prices, housing, and also the depreciation of the US dollar. Particularly, need to look at GDP and the current account deficit, but I will do those in separate broadcasts. Thank you very much. This is Morty Sill from London.